Hello, everybody. Jerry DeMaio from mortgage-zoom.com and Family First Funding. And the topic for today is the weekly mortgage rate update for October the 28th, 2022. But first, as always, I'm going to ask, please subscribe to my channel. And please don't forget to like this video. So I have some good news this week. We've seen some improvement in mortgage rates. Now, have we seen lots and lots of improvement? No, but we have seen some improvement. And this is the first time since the beginning of August. That's right, since the beginning of August, that mortgage rates have ended the week lower then they started the week. Now let's go to the videotape. And so we're taking a look right now at the 10-year Treasury yield. And typically interest rates follow the 10-year Treasury yield. So on Monday, the Treasury yield had peaked at 4.249%. And this all week long, mortgage rates, Treasury yields, we rallied until today, and the rally seemed to stall, and we started heading in the wrong direction a little bit. But we've ended the week. If you look at the chart here, we've ended the week much lower than the week started. So what does that mean? What does that say? It might say that we peaked in the low 7%. It might say that. But the rally that we saw, the 4-day rally, which was great, we haven't had a 4-day rally in months. The rally ended today and we started moving in the right direction. So it may be a market correction instead of a full-fledged rally. Now, next week, we have a lot of data coming out that might tell us, that's going to tell us some more in what direction things are headed. So I'm gonna go into next week's chart. Give me a minute. I'm sorry. Okay. So next week's chart, important data. So basically, we're going to find out the direction of mortgage rates again next week. We have some big data next week. The biggest data is the Fed is announcing on Wednesday that they're going to raise rates, 0.75%. Now, so everyone understands, mortgage rates aren't going to go up because the Fed raises rates 0.75%. That's already priced in the market. Again, that's already priced in the market. In fact, another rate hike of 0.5% next month is also priced in the market. What we're waiting to hear on Wednesday, very important, Wednesday, 2 p.m., what we're waiting to hear is the Fed bullish on future raises, or is the Fed talking about, hey, we're starting to see some, headways in inflation and maybe less likely to continue raising in the future. But that's what we're going to hear on Wednesday. Again, it's not the 0.75 that they're going to raise it. We already know that. It's what they say after that in their press conference, what they say after that, what's going to happen in the future. Then we have on Friday, we have non-farms payroll. Big thing. The Fed is looking to see unemployment rate rise, and they're looking to see the less job creation, to show that the things they've been doing to slow the economy have been working. So more will be revealed. But let's hold on. Let's hold on tight to the good news this week. The good news is mortgage rates are better today than they were at the end of last week, which is the first time in months and months and months that I can say that. So good news there. What does it mean for you? It means if you're looking at a 30-year fixed mortgage right now, you're probably in the high 6% as opposed to the low 7%. So that's an improvement. That's all we can ask for right now is to see some improvement. If you want to find out the best situation for you and some special programs that are available for moderate income borrowers, for moderate income areas, if some programs that they offer grants, in New Jersey, we're offering a $15,000 homebuyer grant for first-time homebuyers. There's also some really attractive 5 and 7 year ARMs available right now. So if any of these programs interest you, if you want to find out how to make a home more affordable, if you want to ask questions about what a 2-1 buy down means, Jerry, what's a 2-1 buy down? What you have to do is go to www.mortgage-zoom.com. That's right above me. And you're going to go on and schedule an appointment with me. And it's going to look a lot like this for your one on one and find out what works best for you and your family. So, again, if you haven't subscribed, please, please, please subscribe to the channel. And please, please, please don't forget to like this video. Thank you again. We'll see you next week. Thank you, everybody, for joining, and thank you for all your continued